All right, let's go ahead and get started. I am going to do my charting for tomorrow, which will be Tuesday, December the 2nd. So we'll go ahead and jump into what we have on the charts jumping off for tomorrow. But before we do that, let me go on and bring up the disclaimer so that you can have that in advance. This content is for informational, educational purposes only. Nothing shared in this video should be interpreted as financial advice, investment guidance, or recommendation to buy or sell any security. All trading involves risk, and you're responsible for your own decisions. You can take your losses just like I take mine. Always conduct your own research, evaluate your personal risk tolerance, and consult with a licensed professional before making any financial investment decisions. With that being said, let me jump into the charts, and we are always going to mark up the 4-hour charts. And as always, those that have trained and studied with me, we always will jump into the 15-minute chart to do any of our executions or exits. So let's see where we are currently. We closed at 617.20. This is the triple Qs, NASDAQ. Go ahead and start marking up the charts. These are high volume nodes. High volume nodes indicate where buying and selling has taken place in the markets, and we want to capture those areas because they also gives us some indication on areas where we might find balance and opportunities to determine where buyers and sellers are located. So we'll do that across all of the various tickers that I trade, and I'll kind of take you through those one by one. But first up is NASDAQ. And so we have a couple of levels above where current price is sitting. Let me go ahead and put a second level down here for uh, the lower levels where we can look to have points of interest. So that's the Qs. Let's jump over to SPY, and I'll go back in and take a look at highlighting the liquidity levels after we finish up. Let me go ahead and draw the zones. Zones of interest always captured around high volume nodes. This is the visible range volume profile. I use this to capture, once again, multiple days or weeks of data, and then lets us know where high volume was taking place. Buyers and sellers are present. I like to trade within those zones, or I consider those are areas of interest, so that I can determine whether or not there's an opportunity or a high probability of success with taking trades. So that's what we do each and every single day. And I also will take a look at if there's a gap up in the morning or a gap down. I'll make some modifications based off of that as well. So there we go. SPY. Let's take a look at Microsoft prices down here. So we want to make sure we capture the zone where price is currently sitting. We want to take a look at areas below where current price is sitting. So we'll do that one. And then we'll take a look at a zone or two above where price is currently sitting. And so we'll do this. And I know like all my boxes to be even. And so let's see what we got here. I'll capture this entire zone. You can potentially break those out into two, but I'll capture that as just one zone. Let's go to Apple, see what Apple is talking about. And let's see. So we'll capture this zone. We'll capture the zone above where price is currently sitting. So we finished up on the day here. So this will be a hard one to kind of trade because we're at a high point level here. We'll capture it. There's a different way I approach trading when tickers or stocks are at somewhat all-time highs. I tend to wait for the first hour of trading to take place, which will establish the initial balance, and then I use that as a guideline for taking trades on those respective instruments. But that's a totally different topic for a different day. Go. Got our zone to the upside. Got our zone to the downside here. And let's just take a little slice of the top part of the zone. And all right, let's go to Amazon. That was just Google that we did. See where Amazon is. Amazon is up here. So we want to capture this zone. There. Next big zone is above here, quite a distance, but we'll capture it. Um, and we have the zone to the upside here. And then we'll take a look at this zone to the downside here, which is the biggest zone out of all. So definitely want to capture this one. So there we go. Let's go to NVIDIA, see where NVIDIA takes us. This captures this zone. And you might be thinking that looks like a small zone. When we zoom in to the 15-minute chart, you'll also see that the zones typically have pretty decent size and allows you to capture nice size moves if you play them correctly. So these are macro composite volume profiles captured by way of the visible range volume profile. So it takes multiple um, session volume profiles and then combines them into one. And it's capturing data all the way back to September for this particular volume profile that we see here. So a few months worth of data and we're capturing it here. And like I said, these zones look thin, but let's do a quick look at these zones on a 15-minute. So if we zoom into the 15-minute, you can see that this zone right here is 181.33 up to 183.86. This one is from 178.46 down to 176.23. So a couple of dollars there. We talk about if you're able to capture these moves, it gives you a pretty decent return if you capture the entire move. So that's why I like drawing these zones. They become the zones of interest or areas of interest. And we know that these capture the areas where buying and selling took place. So we do these once again across all of the various tickers that I watch. And I do it for every single one. And I do this every single day because one of the things I learned about myself is if there's no activity on a ticker, then I try to create trades instead of observing the markets and simply taking what the market presents to me. And if I have multiple tickers that I can take a look at across the board, it allows me to not try to force trade because no activity is happening with the ticker. So I used to trade SPY, which is the S&P 500. Used to trade that, solely, but there are some days where SPY might not necessarily be moving. And if that's indeed the case, then I want to be able to have some other alternatives, or if SPY is not, moving into these areas of interest and so on and so forth, then I don't want to force a trade. I want to be able to observe some other tickers. So that's why I do what I do. The last ticker we'll look at for marking up, and once again, I do this on each and every ticker each and every day. So we'll capture AMD and see where we can land with that. It is holding on to this zone to the upside, which is interesting. If you've been following for a period of time, there's this gap. There's a gap that exists between 171 and now I think the lows here is by 194. There's a 20-point gap in between here. So been very much watching and trying to observe that level, because if it breaks to the downside, then we could be in a free fall all the way down until we get to this 170, 166 area. So definitely keeping an eye on this area up here. If it begins to falter, then we could see a free fall all the way down to this zone. So definitely don't want to do that. I don't want to miss that particular play. If it did indeed takes place, I want to be able to capture it. And so yeah, so that's what we do, drawing our zones out, and then typically I'll go on each ticker and I will try to draw out what target liquidity areas might be. So we have one here, and that simply is, kind of swing highs and swing lows of where, kind of the next levels of liquidity could be present. Swing highs and swing lows are typically where those exist, and we would call those external range liquidity targets. But in situations where you have a large range like that, I also want to capture, some of these swing lows. So that's the swing low on this one. And they don't have to be perfect, just areas of interest and watching. We have a swing high here, and we have a swing low here. So I'll capture that one, and we'll do this for each one of these tickers just so that we can capture swing highs. This is at our all-time high. And then we have this swing low area where liquidity could be hiding, and so we'll keep an eye on that to try to target it. If indeed that is the case, we are going to target this one and then the swing high for Google be somewhere around here. And you can see those kind of correspond with daily highs and daily lows. So if you want to just simply target previous day high, previous day low, those are good areas for identifying potential liquidity zones to attack or target or be aware of. So there we go. And kind of keep an eye on these throughout the course of the day just to see if there's any stacks of orders building up in these particular areas. And you can take a look at that using the order book. I have another software program called Bookmap, which shows the pending orders or limit orders. Also shows order flow. So I can take a look and keep an eye on that as well. And yeah, so we've marked up the charts. We have our zones of interest. We also have these liquidity zones, which are these dotted lines that are present. I have my EMAs. The 50 EMA is the orange one. The 21 is the yellow one. And so if the 21 is underneath the 50, then I typically am looking for shorts. The 21 is above the 50, then I'm typically looking for longs. If the price extends or gets too far away from the MAs, then we may look to take a counter trend that would uh, anticipate or keep an eye on a reversion back to the mean. And so that is, typically how I attack the chart. So with that being said, let's take a look and see if there are any opportunities that we're going to keep an eye on. So let's take a look at the 15 minutes for each one of these tickers. And so we already have our zones marked up. So I'm going to take off the visible range volume profile. I'm going to turn on the session range volume profile so I can keep an eye on it. But we see prices in the middle of a zone. So I will wait until we get to the lower part of a zone or to the upper part of the zone to take a look at what I'm going to do. The 21 is above the 50, so I am anticipating or hopefully looking for longs. So if it comes down into this lower area of the zone, then I'm looking to buy in at a discount. And if there is a positive cumulative delta, then I'm also going to be looking at ways to take the market long buying calls on this particular ticker, and that allows me to, put probability on my side. So that's what we want to do. So that's the cues. If we're looking at S&P, we're in between a zone to the upside, a zone to the downside. I don't like trading when the price is in these zones. So I'm waiting for this liquidity to get taken to the downside, or I'm like waiting until we get a break to the upside here before I have any interest in SPY. And taking a look at Microsoft, we're in the middle of a zone right now. I'm looking to wait and see if it comes down and touches this lower part of the zone or the upper part before I have an interest in what to do at that point. 21 is above the 50, but they're flattening out, which could indicate that we're going to see some consolidation or range activity. I wouldn't have an interest in that, so I'll keep an eye on it, but I'm probably going to take that off my board for Tuesday. Apple, like I said, it kind of just continued to trend upward. Started at 276 today, and it concluded at 283. We see that the EMAs are now starting to fan upwards, which indicates that trend. We're above the 21, so we're looking for calls. It's still pretty close in proximity to the 21. So I'm not sure if we would be looking for a full mean reversion, but because we're a little bit of outside of this, we would be hoping for a pullback, and then we would have the ability to jump in and go long. But we're at an all-time high, I believe, here. And if that's indeed the case, then we trade this a little bit different. I allow the first hour of the day to play out, mark out the high of that first hour and the low of that first hour, and then kind of play off of that. So that would be my approach for Apple. For Google, we are in between zones, so I don't like to deal with that. So I would anticipate, and well, the 21 is under 50, so we would be looking for shorts. Um, I don't like playing in between zones, so that's what makes this one particularly more challenging. If we see a reject off this lower zone, you could potentially go short, put your stop loss somewhere above this zone, the lower part of the zone, and allow that to manage your risk, and then play to the downside if the order flow or the trend price action confirms that it indeed wants to continue lower. So that's Google. Amazon, we're above 21 is above the 50. We're holding on to this 21 level. Looks like it's somewhat, kind of tapped into support and trending around that particular EMA. We came down and tapped into the zone and then immediately rejected up. I don't know if that means we're now going to continue up, but I'm going to keep my eye on it. We're outside of a zone. Once again, I don't like that. I prefer to play inside of zones, but if this indeed holds and it comes down and rejects off the top of this zone, then you could potentially put your stop somewhere underneath the candle that was the swing low and allow that to serve as your risk management idea, and then be playing to take out this liquidity to the upside. NVIDIA. NVIDIA, we are in between two zones, so you want to wait. I want to wait, see if this support holds or this resistance holds, and then anticipate a reversion back into the mean. If that's indeed the case, then you can take it. The 21 is above the 50 EMA. So I'm looking for longs. So my anticipation would be waiting until we broke into this upper zone and break in and hold it. If that's indeed the case, then I'm entering calls here. I'm putting my stop loss somewhere down here in this area, and then I'm looking to come up, take out this liquidity, and then also target the upper part of that zone. So that's NVIDIA. And then when taking a look at Palantir, we're in the middle of two zones. So once again, I'm gonna wait to see if we break down lower here or if we're gonna come up and go higher into this zone, but I won't play anything in between. And then last but not least, AMD. AMD is trending. We see the EMAs are trending up. It's holding. We came down and we tapped into this area right here, but we're still trending up. So the idea for AMD would be to take calls, but once again, I like taking calls inside of the zone and within the lower 50% part of this zone. So we see that the top of the zone is 221, 222.01. The bottom is 209.56. I want to take a look at getting in somewhere in the middle of this. So between here, I'm trying to get in calls at the lower part of the zone, or if I'm trying to get into puts, I'm looking to try to get in the upper 50% part of the zone so that I can take it from either the top of the zone to the bottom or from the bottom of the zone to the top. So that allows me to make sure that I'm getting the best bang for my buck. So that's typically how I'm approaching it. So I think that covers all of the tickers that we looked at today. Hopefully, this helps you get set up for Tuesday, December the 2nd. And as always, manage your risk. Don't allow your emotions to get the best of you. But as always, manage your risk. Allow the probabilities to stack up in your favor, and then from there, take smart trades, manage your risk, and don't be greedy. Until next time, thanks for joining KP, and we'll talk soon. Peace.